What's up, everybody? I'm Clay, and I do want to say thank you guys for watching the video. Thank you for subscribing to the channel. Thank you for understanding that YouTube is now run by AI, and it is allowing general discussions about cryptocurrency, blockchain technology, NFTs, news, and so on. That's all that this video is. It's not a promise, promotion, suggestion, recommendation, or guarantee of any kind. It is simply you and I talking about the latest crypto news, talking about the latest crypto action, and talking about the latest for Shiba Inu coin. So let's just jump right into this article here. It says Shiba Inu coin dropped 4.5% to 556 points per coin, as crypto markets shed $515 million in liquidations. And that's a lot of liquidations, guys. You know, if you go out there and you buy a spot asset, meaning you own that coin, whether it be on an exchange or on the blockchain, you own it. You cannot get liquidated. If you buy it on leverage or futures, of course, that's where liquidations, where margin calls, or whatever you want to call it, comes into play. It says inflation data, tech stock pullback, and macro fears triggered this sell-off. Yeah, maybe. There's a lot going on between Iran and other countries out there right now. So I don't think that it's necessarily just tech stock pullbacks and inflation data. Inflation data is fine, right? There's a lot more to do with geopolitical concerns. Shiba Inu coin extended losses on Saturday, hinting at intraday lows. Hitting intraday lows of 544 points per coin amid intensified selling pressure in the crypto markets. The move came after Shiba Inu coin briefly tested the 555 point per coin level that failed to hold as bearish momentum picked up across digital assets. Well, the good news is that bearish momentum has faded, and I don't want to call this bullish momentum yet, but we are still seeing these support levels really holding up. So whether it's bulls pouring back in, whether it's bears losing steam, or another answer that institutions are finally loading back up again, or whatever it may be, the buying pressure is coming in at these lows. Now, you can see $67,000 Bitcoin, $2,000 Ethereum, $86 Solana, and Shiba Inu coin down here at number 27 is sitting at 566 points per coin. So just slightly better than when they wrote this article. It says the broader market took a significant hit with over $515 million in crypto positions liquidated within the same 24-hour window. Most major tokens turn red on a weekly basis, and for Shiba Inu coin specifically, the 7-day losses stretched to 14%. And guys, what makes that so difficult? It's not just the 14% decline, right? We're watching the overall market bleed for essentially 5 months straight, and that 5 months to a retail investor is like a lifetime and a half. Retail investors want to invest, and then by the end of the week, they want to be a millionaire. They cannot deal with these market cycles, which is why the fear is so high. Now, sitting here at a level of 16 fear, I cannot expect speculative assets to rise in value. When this goes back up and people are greedy once again is when I expect speculative assets like meme coins to rise in value. It says the catalyst was a U.S. producer price index report released on Friday. The data showed producer prices rose more than analysts had anticipated. That reading stoked concerns about lingering inflation, reinforcing expectations that the Federal Reserve will hold interest rates steady in the near term. Rate-sensitive assets, including cryptocurrencies, sold off in response. Now, three triggers behind the decline. Shiba Inu coin team member Lucy addressed the sell-off directly, naming 3 key factors behind the market's decline. First, hotter than expected macroeconomic data, specifically PPI. Second, a pullback in artificial intelligence and technology stocks, which have historically dragged risk assets lower in tandem. And third was a broader market rise in macroeconomic uncertainty, which has driven institutional and retail investors towards safer positions. Guys, these institutions and retail investors have not been touching risky assets essentially since October, when we fell back into a level of extreme fear. So I do believe that this bear market, this selling pressure, will eventually fade. Unfortunately for everybody, I cannot predict the future and tell you when. But what I can do is continue accumulating in anticipation of the rise, and that is exactly what I continue to do.